Hello everyone and welcome to another edition of the Forex Technical Market Update for Thursday. It's Thursday, yes, October 8th, 2015. Okay, in front of us we have a chart of the British pound versus the US dollar. And as you can see over the last couple of months, the British pound has been in a sideways pattern, pretty much like most of the other European pairs. And that is the boundaries of the sideways pattern that we are seeing with this market. If the market, this market, as I said yesterday, is the bias is to the downside slightly, but because the markets have been going sideways for this long, the market can go in any direction. Now, a break below the 146 level will would be very bearish for the British pound, and we could see a move down to even 140. I was listening to some analysis yesterday, and they were saying that there is a new bull market in the US dollar that's coming, and it will continue the move that happened last year. Now, this is a weekly chart of the British pound, and just taking a look at some lows, we have a low at 145. This was the previous low. So if we break down 145, the other low is near 141, and then we have a low that was made in 2009 of 135. So could this just be a resting point for the market to eventually head down to 135? If we do break below this 145, 146 level, that could definitely be in the cards longer term. Remember, this will be a longer term move. It won't be a move that happens overnight. On the other side of the equation, another argument is that the market bottomed out near, and if we draw this line, I was speaking to a bull, and he said the market was at support, these support areas 2013, and the market breached it slightly this year, but recovered. And what the market is doing now, it's recovering, and then will surpass this 160 level and head up to 170. And that's why you see you can make money in these markets, because two separate analysis, one having the pound at 135 sometime next year or early next year, and one having the pound up to 170 at the same point next year. So where will this market go? We will have to wait and see. The good thing about our investing philosophy is we let the prices lead the way. So if we see that the market is going to the upside and looks to be going to 170, we will then hop on a board and catch that trend. If we see that the market is heading towards the 135 level, we will hop on a board and catch that trend. And that's a philosophy when you are trend following, as opposed to trying to predict markets. Predicting markets can be very dangerous. It's best to just let the prices lead the way, and you simply follow. Taking a look at the euro, another longer term, we're going to look at another longer term outlook on the euro. Okay, weekly chart of the euro also. Now, the bottom of the euro, or the low that was made in the euro, was at the 85 level all the way back in the year 2000. Now, if we consider this one whole wave to the upside, the argument with the euro is that this whole move down is a mere retracement, and the market will start another long-term move to the upside, and eventually, well, this is very longer term, eventually take out this 160 level. But that will be in a number of years, obviously. But over what the projections for the rest of the year, early into this year, early into next year, sorry, is that the market will take out this 117 high and head up to 125 or even 130, and that will be a Fibonacci retracement level of this move to the downside. Let me just move these lines so you can see what exactly I'm talking about. Okay, so we have the down move. This down move took place between July 2014 and March 2015. Okay, so the argument is that the market will retrace this move to the downside and either go up to the 50%, 60 or 78.6 retracement level. So that will take the euro to 122, 126, 132. Those are the retracement levels of this massive move to the downside. That is one argument. That's a bullish argument. The bearish argument is that this market is just consolidating and will make another push to the downside into the parity region. So after this consolidation that we're seeing here, the market will break down and could hit parity early into next year. So again, two different projections. One, that we could be at parity sometime next year, and the other, we could be at 122 or even 132 on the euro versus the US dollar. Again, what we will do is follow what the market is telling us. So if we see the market start to trend to the upside, we will be on the move to the upside. If it breaks to the downside, we will follow the trend and move to the downside. So again, the philosophy of just following what prices are doing would serve you better in this instance, as opposed to trying to predict exactly what the market is doing. And let me just do another long-term projection, and that is gold. Now we are in a consolidation with gold. Let's take a look at the weekly chart of gold. The analysis is that we're at and around the 618 retracement level of the move in gold from roughly the 700 level all the way up to the high that was made at 1916. This is just a mere retracement, and the market will move to the upside. Now, there are folks that are saying that the retracement could last even down to the 786 retracement level, which will be around 944 in the gold market. So when we see a consolidation like what's happening now on the daily charts, that the market could then break down further and hit that 786 retracement level to the downside. Now, because gold is already in such a strong downtrend, that could be a likely scenario, and you could see gold into this level, 900 level, sometime later this year or early next year. On the other hand, there are folks that are saying this could be the bottom, although there is no evidence of it yet. And if we trade back to the 1200 level and take out 1300, we could see another move up in gold to the 1500 level mark, because this down channel would essentially be broken. This downtrend line would essentially be broken. Wait, why did I draw this? Weekly chart of gold. So that is what is happening. Just giving you some longer term analysis of the various markets. It's good to step back every now and then to see what is happening with the market. Next week we'll be taking a break from the Forex daily updates, because we have some investing conferences in the early morning here when we normally record the the, the market updates. So we'll try and do one or two next week, but because of the schedule that I'm having next week, we may take a slight break from the updates next week. I hope you all will still be able to survive without these important updates, but I would fit them in as best with the schedule I have. It's a commitment I have that I essentially cannot break. Now, if you would like to have the trading signals sent to your trading account, we are in the busiest part of the year when it comes to the markets. It's the first week in October. Markets haven't moved that much yet, but we're seeing signs that activity could be picking up. So click on the link below this video to get started with the signals, and we'll have another update tomorrow, and then I will give you more details as to the schedule for next week. Thank you very much for listening, and have a wonderful day.